But the stock of the day is Woodside Energy. Its first quarter revenue has fallen on lower realized oil and natural gas prices. It's the country's biggest oil and gas producer, and revenue fell to $2.97 billion in the 3 months to March. LNG and oil prices rose during the period amid tension in the Middle East, but were still lower than the December quarter. Woodside, though, has kept its FY production targets unchanged. All right, Adam, I'm going to start with you on this one because we have a little history when it comes to talking about Woodside, because this has been a bit of a pain trade for you, hasn't it?
Yeah, it has been. And you always look to those large companies to start with as far as building out portfolios. And Woodside has always been one of those ones that we use for oil and gas as exposure to that. But certainly Woodside over the last, well, let's say 3, 6, even 12 months has really sort of underperformed. And it's been a bit of a hard one for us to sort of continue with that rhetoric that Woodside is now going to be our favourite oil and gas play. We've sort of moved a little bit away from Woodside, and we've been rolling into Santos and Beach, two of the smaller players in the market. I think Woodside's got some issues with some of their gas delivery, and that's showing that through the market. And even with this tension that's going on in the Middle East. I mean, Woodside's not just an oil company, it's more gas, but certainly it is looking like that should do quite well, but it has been really tough for us. So overall, it's neutral. Can I say a hold on Woodside? I think it's a very good business. I'm very comfortable with it, but it's not providing the returns, and it doesn't have the leverage to the oil price, which Santos and Beach do.
Got it. So that's a hold for Woodside Petroleum, even in the wake of its quarterly update, sticking by its guidance. I can see that it's even causing you a bit of pain to say this. Like, let's be honest with our viewers.
Yeah, like it's been a tough one. Like it has. It's really been a tough one for us. And, you know, you sort of gravitate to the larger end of the market. I keep saying that. Well, that's where we gravitate to, but it really hasn't provided us the growth that we would have expected. You know, they took over BHP's assets, and that was supposed to be the new herald of this company with the amount of growth in those oil assets. But it really hasn't translated into profitability on the share price. And then you've got ESG overlays. There's lots of things in there that are sort of really struggling. And I just think that, you're better placed in something like a Santos or a Beach.
Thank you. All right, let's go to Conrad Song from Macro Capital on Woodside, please. Buy, hold, or sell?
Yeah, I mean, look, we have to agree. I mean, it's an underperforming stock at the moment. Look, I think Adam's touched on some of the sort of more disappointing things about this company. A couple of the more, I guess, slightly neutral to positive things is, they do have long-term, very long-term LNG contracts. So that does indicate sort of market confidence in that space. Woodside's also very well sort of positioned as a business for increased demand in Asia. So I think that's a major thematic that people have been sort of waiting for and looking to see price in. They've had significant progress on some major projects. So you take a look at their Sangomar field, Scarborough Energy Project, and so they've got sort of the environmental approvals in place for that construction underway. So economic thematics are hurting this, but potentially we see a catalyst with the previous discussion that we had in regards to the war. But again, as I mentioned, it's not as highly correlated to that. But there are some potential catalysts that I think investors could be sort of seeking out, and considering the share price might be something to at least hold and wait for.
So a hold for Woodside. Got it.
Yeah.
All right, so that is Woodside Petroleum, and we've got news and breaking news in our blood. So I will just update you that the local market is now down by 1.8%. So it's looking pretty dicey out there for the remainder of this Australian session. When you think about it, why would you want to hold a lot of risk of going into a weekend? And we've got markets around the region tumbling as well. We've got the Nikkei down by 3%, and Chinese markets are just coming online slightly negative. But across Forex markets as well, we've got the Euro Yen down by about 0.7%. And so we will continue to keep an eye trained on the market moves out there. But week to date now, our market is off by 3.6%. I don't have the stats in front of me, but there will be. We haven't seen this type of a fall for the week, for the 5 trading days for, quite some time.